Hi everyone and welcome back to another video of Financial Impulse. So semiconductor stocks have been in a lot of demand in the last 1.5 to 2 years. So I have picked 5 semiconductor stocks which are the best in this sector, and I am going to do the complete analysis of the stocks, and I will help you in finding out which one will suit you better for investment. So first I will do the fundamental analysis and I will check only the critical points like debt to equity ratio, last 3 years profit, sales growth, sales and revenue growth, earning per share growth, and which will also include the operating profit margin increase or decrease. After that I will go to the shareholding pattern and see if there is any major increase or decrease in stake by either the promoters or the smart money, and then I will go to the price action to help you understand the timing, if this is the right time to make an entry in that particular stock or not. So this video is going to be very informative and also obviously futuristic video, because semiconductors are the future. So make sure to watch this video till the end. Let's get started. Okay, so this is Forbes Advisor website, and here they have listed out 6 semiconductor stocks, but I will analyze only 5. The one which I am not going to analyze will be Vedanta, because this company is in a lot of debt, so I do not consider this as a good investment from the very beginning itself. So I will not do the analysis of this one, and I also would not recommend investing in this stock. So I will analyze the other stocks, starting with Tata elxsi. So let's go to Tata elxsi. Okay, this is Tata elxsi. Let's quickly check the debt to equity ratio. Tata elxsi's debt to equity ratio is 0.11, which is a very good number. Okay, then we'll go to the year on year profit and loss statement. Okay, so we can see that in the last 3 years the sales have increased nicely. Okay, from 2471 to 3145, then 3484. Operating profit has also increased 767 to 962 to then 1035, and also you can see in the last 3 years the operating profit margin has more or less been the same, 31%, 31%, 30%. So no major increase or decrease, which there is consistency, which is a good thing. And also the earning per share has seen some good growth, 88.26 to 121.26, then 127.90, and you can see it came from 59.11. okay, so clearly there is growth in earning per share, which is what we need. Now coming to shareholding pattern, so we can see that in the last quarter the promoters have not changed their stake. It is still 43.92, but we are getting to see some significant increase in stake by the FIIs from 13.80% to 15.02%, which is really good. And then coming to DI's holding, there also we are getting to see some growth, 4.80 to 5.71. So almost you can say 1%. Okay, so this is clearly a sign of strength for the company fundamental wise. The profit and loss statement, the shareholding pattern, everything is clearly showing that Tata elxsi is fundamentally strong and should be considered for investment. But let's go to the price action and see if we can time this right or not. So this is Tata elxsi in daily time frame, and I have used the anchor VWAP point here. Okay, and we are getting to see that it is the line that it has drawn was acting as resistance at this level, which was broken here, and now it is trying to continue its uptrend. Okay, excuse me. And if you enable the 50 days EMA, we are getting to see there already has been a crossover. Okay, there has been a crossover, which is clearly indicating there is growing strength in the company. Okay, so along with this we are going to check the 200 days moving average. Okay, and when I enable 200 days moving average, this big black line, okay, you can clearly see the stock is just coming out of consolidation from the 200 days moving average. Okay, and here I can see clear sign of strength for Tata elxsi near 200 days moving average, and also we saw that the 50 days EMA has already given a crossover above the anchor VWAP. So question is, can you make an entry at this point in Tata elxsi? The answer is a definite yes, and I don't see any better opportunity than this. Okay, it is coming out of consolidation from 200 days moving average, and it is clearly showing sign of strength, and it is definitely going to continue its uptrend. What that is what the price action is telling us. Okay, unless there is any major change happening in the market like a war or something, it is definitely going to continue this uptrend. The momentum is looking very strong. So if you are thinking about investing in Tata Elxsi or a strong semiconductor stock, then definitely at any cost you cannot avoid Tata Elxsi, and you should consider it for investment definitely, and you should consider it now itself, because I just showed you that it is a very good time to make an entry in Tata Elxsi. Okay, so that was about Tata Elxsi. Now let's go to the next stock, Dixon Technologies. Okay, so let's find out Dixon Technologies. Here it is. Now quickly coming to the debt to equity ratio 0.19. Okay, very good. No, not much of a debt in this company. Then annual profit and profit growth and sales growth. There is clear sign of growth. You can see when I come to the sales growth, you see in 2022 it was 10,697 crore, which went up to 12,192, then 16,098 in trailing 12 months. Okay, so which is really fantastic, and you can see the operating profit growth. Okay, 384 to 519, then 671. Okay, clear sign of growth, and the operating profit margin has been consistent at 4%. Okay, now the 4% OPM might seem low, but we have to compare it if that has been the standard for this company or not. So if we consider the past, we are getting similar numbers, 4%, 5%. So there is no problem at all. In fact, the sales and the operating profit margin has gone up significantly, which is a very good thing. And if you just take a look at the sales growth, okay, and operating profit growth from 2012, you will see a significant increase, okay, in number by this company, which is just fantastic. Okay, it is multiplying really fast. Okay, and if you see the earning per share growth for the last 3 years, 32.05 to 42.90, then 59.23, clear sign of growth. So definitely this is a strong growing company. Now coming to the shareholding pattern. So when I come to shareholding pattern, I see that the promoters have slightly decreased their stake from 33.80 to 33.60. So 0.17% decrease, not much. But at the same time, the FIs have increased their stake from 15.66 to 17.41. Okay, so this is almost 1.8%, almost 2%. Okay, 1.8% to be exact, increase in stake. Now coming to DI's holding, they have decreased by 1%. So overall, this is giving a neutral picture, but the FIs have increased their stake by more margin than the decrease in stake by promoter and DI. So clearly indicating strength. So fundamental wise, this is clear. No problem with Dixon Technologies at all. Now let's check the price action. Dixon Technologies. Okay, and it is clearly showing in daily time frame that it is already in strong uptrend. Okay, and this is the 200 days moving average, and you can see it is far away, so we can hide it now. We don't need it. Let's use the 50 days. So you can see it retested the 50 days moving average here at the price of 6,600 around, and now it is continuing to go up. Okay, and clearly there is sign of strength, no sign of major decline. And in case you are wondering if you can make an entry right now or not, I would say definitely you can. Okay, although the better entry point was for Tata Elxsi because it was freshly coming out of the 200 days moving average consolidation. Okay, and if you ask where was the good point for entry in Dixon Technologies, I would say it was here somewhere around 6,400, and here also when it touched the 50 days moving average again, and here it might come down little bit. Okay, but if you are a positional trader or a long term investor and you consider that semiconductor is the future and you want to stay with it for the long run and do not want to exit with this very small profit of 20-30%, then no problem for you at all. You can make an entry right now. Okay, although again I would repeat that Tata Elxsi is at the better entry point. Okay, so this was about Dixon Technologies. Now let's go to the next stock, that is Bharat Electronics. Okay, Bharat Electronics. Alright, so let's quickly check the debt to equity ratio. So that debt to equity ratio is 0.00, which is fantastic. Okay, and let's go to the annual sales and profit growth. So we can see the sales have increased sharply. Okay, from 15,386 to 17,734, then 18,183. Okay, same with operating profit, 3,344 to 4,000, then 4,591, and operating profit margin has also increased. This is a very good point for Bharat Electronics. And personally, I would say I am also an investor in Bharat Electronics. Okay, so 22% to 23%, then 23% to 25%. Very nice growth in operating profit margin. Now coming to earning per share, there also we are getting to see some good numbers, 3.28 to 4.08, then 4.89. Okay, very good increase in earning per share as well. Now let's go to the shareholding pattern. So let's check the last quarter, okay, September and December. So 51.14, 51.14, no change in stake by the promoters. 17.19 to 17.77, there is increase in stake by the FIs, and here 24.19 to 23.37, okay, slight decrease in stake by DI. So I would say the shareholding pattern is stable, it is kind of neutral, okay. The FIs have increased the stake and DIs have decreased the stake little bit, very small margin, less than 1%, which is fine, okay, not a problem. So overall this is looking very strong and should definitely be considered for investment fundamentals wise. Now let's check the price action. So BL Bharat Electronics, okay, and here we see that it has recently touched the 50 days EMA twice, okay. Here was once 182 and here it touched again almost at 190, and now currently it is at 222. Now question is, can you invest in this stock right now? The answer is similar to Dixon Technology. Yes, it is not at the best entry point, but definitely you can invest in this stock right now because it is near the 50 days moving average. I would say 12 to 13%. So if you are a positional trader or long term investor, for you it is not a problem. You can check the weekly time frame, okay, and it is clearly showing sign of strength. You can stay invested in this stock for a long time and you will get very good returns, okay, because this is a debt free company, a growing company with strong shareholding pattern. So definitely your money will be safe here. So you can definitely consider this for investment, and now is also a good time, okay. So let's go to the next stock, okay. So Vedanta we are not going to analyze. HCL Technologies, okay. So HCL Technologies, okay, right. So coming to debt to equity ratio 0.08, which is fantastic, okay, very good number for debt to equity. Coming to profit and loss statement, last 3 years 85,651 crores to 1 lakh, more than 1 lakh crore, then 1 lakh 8,000 crore, okay. Same with operating profit, we are getting to see an increase 20,529 to 22,628, then 23,944. Clearly there is increase, and the operating profit margin has almost been stable, although there has been some decrease, but not much, not more than 5%, okay. 2% is acceptable, okay, which is fine, okay. And if you see, earning per share has also seen some good growth here, okay, 49.74 to 54.73, 57.85. okay. So there is good sign of growth, although I would say that the growth here is little bit slower, and the reason is also valid. You see the market cap here, okay, big market cap, 4,20,000 crore. So obviously this is going to go slow, and people who like to invest in stock with PE ratio less than the industry PE, for you this is also one more valid point. You see 30.9 and 26.8, okay. So the current PE for HCL Technology is below the industry PE, which is a good thing if you consider that as a criteria, okay. And also you'd say that I did not show it for other stocks, so let me just quickly show it for Tata elxsi. Let's see, and Tata elxsi is actually trading at a higher PE than industry PE, and I would say I would prefer Tata elxsi more than HCL Technology. The reason being, this is in a lot of demand than the industry itself. So this is the opposite point of view. But this is also a smart investing technique, but both are fine. If you want to buy stocks when they are below the industry P, that is also fine, but I personally prefer when it is more than the industry P. We can safely assume that it is in a high demand than the industry standard, okay. Now the other stocks, Bell, Bharat Electronics, okay. Here also the stock, you can say it is kind of undervalued. 45.7 is the stock P and industry P is 68.4, okay. This is also in a good position. Now did we miss any other stock? Bharat Electronics, Dixon Technologies, okay. Let's see Dixon Technologies, okay. This is also trading at a higher PE than the industry PE, Okay, no problem at all. But as of now, from all the analysis, my favorite pick will be Tata elxsi. I would say that that is just at the fantastic level for buying. Okay, you cannot miss that if you want to invest in a stock like that. Okay, and let's go to the point we were analyzing, HCL Technologies. Let's finish it. Okay, so we analyze the profit and loss. Coming to shareholding pattern, we see that in the last quarter, the promoters have kept their stake stable, no major increase or decrease, 60.80. Okay, and I would also like to mention that I am personally an investor in HCL Technologies long back, since a long time. Okay, FI's holding have increased slightly from 18.80 to 19.42. DI's holding has slightly decreased by 0.5%. Okay, and we can see that the government has also initiated some stake here, 0.02%. Okay, so overall shareholding pattern of HCL Technology is looking stable. Okay, and the increase in FI's stake is also a good point. Okay, so we can safely assume this is a good investment fundamental wise. Now let's check the price action and decide if we can invest right now or not. Okay, so let's see where. Okay, so we can see that the stock is actually resting on the 150 days moving weighted moving average. This is 150 EMA. Okay, and we can see the stock is trying to make this as its base, and if you closely observe, it is clearly aligning with this point. Let me draw the line so that you can see. Okay, you can see this support that it is trying to find here is actually the resistance here. So there is a high chance that it could turn into a support and the stock could come out of here. So for you, the next course of action is not to jump in directly, but wait for the stock to go above the 50 days EMA. Let me remove all these lines so that there is clarity in the chart. Okay, so you have to wait for the stock to give a breakout above this level. Okay, this is around 1600 level. Once it gives a strong breakout above here, you can mark your entry. So for you, it's time to keep this in your watch list and observe its price action. Okay, once it breaks above the 1600 level, then you can jump into this stock. Okay, that will be a good timing for entry. So if you are holding the stock from at a lower price, then you can safely add more units of the stock right here. Okay, not a problem. But for fresh entry, you have to wait for a breakout above 1600 level, this level. Okay, so that is all about HCL Technologies. Now let's go to the next stock, which will be the last one, Moschip Technologies. Okay, Moschip Technologies. Okay, so we can see that the stock's PE is actually way higher than the industry PE. So this is little bit of concern. Okay, we have to be little bit concerned here because it is way higher, multiple times. I think it is 4 times higher than the industry PE. So that can be something to be concerned about. But let's see if it has valid reasons or not, and how strong it is fundamentally. Okay, coming to debt to equity ratio 0.37, which is not excellent, but it's good. It is below 0.5. Now let's see if it has been growing year on year or not. Okay, so for the last 3 years, we can see there is clear sign of growth in sales, 148 to 198, then 272. Okay, and operating profit 23 to 26, then 34. Okay, clear sign in growth in operating profit. Operating profit margin 15% to 13%. 13% is still same. Okay, we can see there has been some fluctuation here. Okay, and you can see it was in negative operating profit margin, which means it was in loss earlier. Okay, it started into turning into a profitable company in 2021. The operating profit margin was 7%, which went up to 15% in the next year. Then it is trying to become stable at 13%. So I would say from the analysis point here only, it is kind of a risky investment as of now. Okay, and let's see the market cap under 2000 crore, obviously a small cap. Okay, let's check the shareholding pattern. So we can see there has been some decrease in shareholding pattern, 51.23% to 50.32%, then 47.64%. Okay, decrease in stake by promoters. At the same time, we are getting to see some increase in stake by the FIs. Okay, they were not holding any stake at all earlier. Now they first accumulated 0.2% of this company, then it is 2.84%, more than 10 times. Okay, of the previous quarter, which is a good thing. Okay, and there is no DIs at all. The rest is held by mostly public. Okay, so I would say fundamentals wise this is little bit risky than the other stocks, and it's not like you should completely avoid. If you want to invest in an emerging semiconductor business, then this can be one option, but along with this you have to invest in one of the mid cap or large cap stock which I just analyzed, maybe Tata elxsi, Dixon Technologies, Bharat Electronics or HCL. Along with that you invest in most chip technologies. Do not simply invest in most chip technologies alone, because it will be kind of risky. You have to diversify your risk. Okay, so let's check the price action. Okay, let me hide these moving averages and MOS chip. It is in BSC. Okay, now let me first enable the 200 days moving average, and you can see there is a very beautiful bounce from the 200 days moving average by breaking this trend line. Okay, this is somewhere around 95 and currently it is at 105. So I would say this is at a very good level for buying from price action basis. Okay, and it has crossed the 50 days EMA also, and that's why it it is at a very good level, and you can see it has tested the 200 days moving average multiple times. So there is a high probability that it could continue uptrend from here. Okay, and as it is small cap company, then I think if the uptrend starts, it will be going very fast, not like the larger companies like HCL and all with 4 lakh crore market cap. This just has 2000 crore. So definitely it has the potential to go up very sharply, and you can see I can nicely draw one channel pattern here by joining these points. Okay, very nice channel pattern, and let me hide the moving averages so that you can get a clear view. Okay, you can see this pattern has been broken and it is starting to go up. So I would say it is not, although it is not at the best time from entry, but still it is not bad also. It is slightly going above, so under 10%, that's fine, not a problem. So if it corrects, I think it will come and fill this gap, might be. Okay, and also it will retest this level. Okay, so this 103 to 100 level will be a good time, and also it is not far away from 105, so it's fine. You can invest in this stock right now, but as I said earlier, you have to invest in one of the large cap or mid cap stocks that I just analyzed. Okay, so these were the 5 major semiconductor stocks. Okay, so if you ask me which one will be my favorite, I would say very simple, Tata elxsi. The reason is it is at the perfect level for buying, and the fundamentals are very strong, shareholding pattern is very strong. Along with that, there is one more advantage that it has. It belongs to Tata Group. Okay, and we know they are working on a lot of futuristic things. Okay, we have Tata Steel and they have Tata Motors, and they are into vehicle industries, they are into EV industries. Okay, and we have Tata Technology as well. Okay, and all these companies will actually give a boost to Tata elxsi's semiconductor business, because semiconductor is being used in all of these industries. Okay, and definitely it has an edge over all the companies. So if you ask me just one company in which you want to blindly go and invest, then I would say it is Tata elxsi. My second favorite will be Bharat Electronics. Okay, third favorite will be Dixon Technologies, fourth will be HCL Technologies, and fifth will be MOS chip. Okay, although along with Tata elxsi you can definitely accumulate some units of MOS chip technologies as well. Okay, so you should invest in at least 2 companies. One is a pretty stable and solid company, other one is little bit risky, so that you can accumulate the big gains that the small cap company can give. Okay, so this should be the strategy. So these were the top 5 semiconductor stocks in India, and I hope this video was helpful and informative. If it was, consider hitting the like button and subscribe to Financial Impulse. And if you are already a subscriber and finding my videos valuable, consider joining the Financial Impulse community, where you will be able to chat with me directly one-to-one on Discord, and also you will get more stock analysis posts. So that's all for this video. Thank you for watching. I'll meet you in the next one. Bye. Take care.